Hi everyone, Wandering Trader, your low production, quick take, one take trading nomad. So, apologies for the delay. Hurricane Ida passed by and we had a Wi-Fi outage, so I'm posting a day late. Anyways, this is the update. So I have had 5,000 shares called away and I realized some profits. So this week, this is my progress. So not too bad. Let's take a look at how I traded. Okay, let's bring this in. So my 5,000 shares got called away. I set it at 15 strike. I was credited 13. And I'm going to pull up my think or swim. It closed at 5.16. I left some money on the table. Interesting week. I still have 5,000 shares in my SOFI. So we'll see what happens. So we're going to see how I traded. I've included, last week we had 50 contracts. This was a call, 16 strike, break even, 1604. Profit 200, 15 strike. I was credited 13, so 650. And I wrote also 50 put on, I believe, yes, 13. So that is how I traded. This was how much I've got and also the realized profit. So with my SOFI position right now, we're looking at my cost basis being 13 and 71 for the remaining 5,000 shares. So now I've de-risked a little bit. I'm a bit cash heavy and I am actually going to go back in. So let's take a look at the risk and reward. Let's see what are the updates. So I've been playing SoFi for about a month and a half already. So we have defined risk, fair value at that time, still in price discovery. Macro themes would be affecting it. Not profitable, biggest defined reward, high guard, 1 year price target, 27 to analyst, 22 to 27. Right, and I've articulated my time horizon. If I've gotten the assignment, would I be able to hold? And for a year, 2 years, 3 years, yes, 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 yes. Ideally, at that time, meanness competition, there's a lot of competition. So let's update with, let's bring it up to date at 8:30. So for 2 weeks, I realized about 3,900, I believe, 2 weeks, right? So I've taken the assignment here, 1450, and I was credited 1550. So anyways, let's go back. So the biggest upcoming catalyst, bank charter, September Fed meeting, new competition, PayPal. How does raising interest rate affect growth fintech? Still trading 10x revenue. Fair should be 12, 14, and this could even go lower. It could go hit IPO price, because remember when they brought it into the public, that's people actually pricing in value and how much they could get. So another thing to keep track of is customer growth in Q3. So based on the analysts, we're looking at 20, 25, 30. So these are some of the updates. All right, risk and the reward. So let's take a look. I thought this was quite interesting. I went on Investopedia, and sectors benefit from rising interest rate. I just wanted to bring some academia into this, and we're talking about financials first. They're like the sector that will benefit the most, right? So this is maybe a piece that you would be interested in, something you could read up on, some light reading. And we are on Investopedia, how do interest rate affect the stock market, and particularly with growth companies, they get hit. Growth is because most of their operation will still require financing. So when they have to borrow money to grow the operation, because they're hemorrhaging money to grow and get more penetration, get more market share, right? So I'm actually, there's not much data pertaining to fintech per se, because there's not much historical data. Fintech, this is a relatively niche and new market, which is something that I'm gonna have to think about and anticipate. So I've articulated how, it's big question marks. How would it? This is some of it. We have to see as we go along. But I've de-risked a little bit, and I have 5,000. So I'm cash heavy. I'm actually gonna adjust myself. I'm gonna go back into SoFi. I like the company. Truth be told, I like the company. I have a couple other companies on my list that I might entertain moving on to next week. But what I'm gonna do next week is I am going to let me pull up the Thinkorswim. What I'm gonna do next week is so my average for the 5,000 shares is 1475. So what I'm gonna do next week is I'm gonna go back in. I'm gonna try to have an average of 1425. So I'm gonna write 25 at 1450 and 25 at 14. And the reason for that is because we're talking about this 5 days. We're talking about like a 8.99% gap up. So there is always going to be a regression to the mean. So it might not be like 450. It might not be 1450, but this is where I'm adjusting myself for risk factors and stuff like that. We're trying to have like a statistical edge in our favor. So we're looking at, so I'm going to write some at 1450 and I'm going to write some at 25. So if I get the 50 lot assignment, then I'll be averaged in at 1425. But if I only get the 25 contracts at 1450, then I will have reduced my exposure in a growth company that is in price discovery and has only had the initial public offering and just the IPO 1 quarter. So what I could do is basically still remain cash heavy, right? So I'm gonna trim this off already. I have some cash that I'm gonna deploy, and it's less than 50% of my portfolio. This is probably around like 35, 40. So I'm gonna try to keep it like around 50, and I'm gonna go in next week. And it's also a 4-day week. So that's gonna be my weekly play for next week, and we're gonna make some money together. So if you like this type of content, please like and subscribe.